Hey everybody, happy Monday. I know my last video was just Friday, but the news is evolving so quickly and so dramatically, it's worth updating you again on the direction of mortgage rates. Most notably because the Fed came out this weekend and said that they were cutting the federal funds rate to zero, which is great. And it's having my phone ring off the hook this morning, people talking about, hey, are mortgage rates near 0%? In short, no. The federal funds rate does not have any direct correlation to mortgage rates. We're still seeing a tremendous amount of volatility in the markets. Here is a graph that shows historically what 30-year fixed rate mortgages do along with 10-year treasury yields. So this is U.S. government debt. And you can see that they are very closely correlated here. But just in the last week, we saw 10-year treasury yields dump and mortgage rates shoot up. And the green line just simply is the representation of the spread between these two. So we are still in very unique times. Mortgage rates have not fallen to near 0%. To put it in kind of a more simplified term, think of all these financial investments at a farmer's market. And the feds just came in and said, hey, there's a problem, there's not enough citrus moving, so we are going to slash prices and buy all of the citrus in the farmer's market. Well, that's great, but as a refinance prospect, you're not looking for citrus, you're looking for a banana. And last week there were a ton of overripe bananas just sitting on the shelf that no one wanted to buy. And that's why mortgage rates were going up, because the prices of them had to be slashed to get them off the shelves. And a sub headline in the Fed announcement yesterday was that the Fed is going to be buying $200 billion of mortgage-backed securities, or bananas. So they basically came in and said, hey, banana growers, don't worry, we're going to buy a bunch of bananas. And they're like, okay, thank you, great. So now the shelves have been restocked with bananas, knowing that they've got a whale of a buyer over the next few months buying a couple $100 billion worth of them. So we have seen mortgage rates recover a little bit. So this was the scenario that I shared last week on a typical 30-year fixed rate at 3.75% since the beginning of 2020, and the closing costs had gotten over $7,500. Well, this morning it opened up under $2,500, and now we're at about $4,500. So volatility is still very much alive in the market. On Friday, I got more market text updates than I ever have before. On a typical day, I might get 5 to 10 text messages throughout the opening market session on things. I got 35 of them on Friday. So because of this volatility, it's ever more important to get a refinance application in with me. So if you think we might be seeing this continue down, which I think it will in the long run, I got 3 steps for you. One is to update your application with me. So if you're kind of a standard borrower with a job and a bank account, these are the things that I need from you. I have to prioritize who I can send rate quotes out to, and this is how I'm going to do it. So if you get your application paperwork into me, I can send you some detailed numbers. Just doing it willy-nilly over the phone is going to be very difficult given the volume that I'm anticipating over the next couple of weeks. If you've got a little bit of outside the box, like you're self-employed or if you're retired, then I might need a few other things here. But take a screenshot or something of this list. I'll also attach it in a PDF to you, and work on getting those things to me. Second is give me an okay to pull a credit report. It's good for 4 months with most of my lenders, so having the application spiffed up will allow us to take advantage if and when rates drop further. And that's step 3, is we need to set a target rate. So if you right now are at 3.75% on a 30-year rate, it makes no sense for you to refi right now because that's about where things are at. But if 3.25% is enough for you to move the needle to get a refinance done, well, let's make that determination now. So when the market gets to that point, I can just take care of and execute the rate lock for you. I don't need to, call you in between your business meetings or catch you after hours after the market is closed to see if it's okay to move forward. And the next morning the rates open up and they're different. Let's set an objective and realistic target now. Doing so will also allow us to lock for a shorter rate lock period, because a lot of my lenders are taking 2 to 3 months to get transactions done right now. But if you get the application going with me, we get a credit report pulled, we can get some of those formality underwriting steps out of the way. So when we lock, we're not locking as if we need the whole transaction to be completed now, because we've already completed, you know, some of the upfront steps that don't require a rate lock. We can still go through underwriting without knowing if we're going to even be officially moving forward with a transaction. There's no penalty or cost the lender charges that I charge if we go through those steps and rates never get to your target rate. So again, get me application paperwork, let me pull a credit report, and let's set a target rate together and monitor this thing on a constant basis. As you can see, I've sent you 2 videos in 2 days, so I'm living, breathing, eating this stuff. So I'll be looking forward to keeping you updated as this story unfolds, at least economically. Okay, stay in touch, be safe, bye.